All right, so moments from now, you've been waiting for it. The Fed is set to announce this highly anticipated interest rate decision. It will likely be the first cut since December 18th, I believe, after relentless pressure from President Trump for Fed Chair Jerome Powell to take action. Welcome back as America Reports heads into hour two. I'm Sandra Smith in New York, and John, great to be with you.
Good to be with you as well. I'm John Roberts in Washington. The markets certainly like the idea and are betting on the potential for a rate cut here. Dow at 46,000, which I will point out, Sandra, is only 4,000 points off of that magic 50,000 mark, and you owe me $1 if we get there.
You know, I'm going to have to roll the tape because I never took the other side of that bet, John.
Oh, come on, it's $1. Why wouldn't you take it?
A dollar's a dollar. I've got Mohamed here to make that point as well. Okay, so we're watching for this to break. We're 17 seconds in. All right, so the Federal Reserve has cut interest rates by 1/4 point. That is confirmed now, as markets were anticipating. And look at that. There is market reaction. The stocks just went up. There you go, John. Okay, even closer to that number where you want to take that $1 from me. Charlie Gasparino is here, by the way.
At your side
of Charlie and Mohamed are here on set.
What did John think it was going to be 50?
John, what was your prediction? Was it 50? I think 50,000, right?
Not 50 basis points, you mean?
Oh, no. He's talking about the Dow.
Oh, the Dow.
He was talking about the Dow. The bet was on the Dow, right, John?
The Dow swooning back in February with the tariff announcement. I said, don't worry, this time next year it'll be 50,000. And we're getting closer and closer to that.
Kudos to you, John Roberts.
Well, we're not there yet. So.
Now, officially, let's bring them back in. Okay, so Fox Business senior correspondent Charlie Gasparino is here. Mohamed El-Erian, the chief economic advisor at Allianz and former chair for President Obama's Global Development Council. And you've made a lot of news along the way. Welcome to both of you, Mohamed, for saying that you believe it had gotten too political. You actually called for Federal Reserve Chair Jerome Powell to step aside. President Trump has nicknamed him Too Late Powell. Now we have the rate cut. Markets seem to be moving higher. Your reaction?
So it is as expected. To tell you the truth, I was hoping for 50. I think that they should have cut in July. And certainly the employment numbers that we've gotten since then confirm that they should have cut in July. But this is what the market expected. What's going to be interesting is to see what the economic projection is. And critically, as Charlie knows, what are they guiding for the future? How many cuts should we expect for the rest of the year?
How many do you think we should get by the end of the year?
We should get at least 2 more.
Okay, there's some who are going to say we need a lot more than that.
Well, haven't we had some hot inflation numbers recently? I mean, listen, I'm with you on Powell should have gone. He should probably not be there right now. I don't think he's done a very good job. I don't think he did a great job, obviously, with inflation. I think he cut during the election, which I think was political and not smart. I think the Fed under Powell got into ESG and sort of way outside its mandate, which should be full employment in the context of low inflation. But we have this weird situation now where there's all these conflicting economic policies and indicators. I mean, on one hand, we have AI, which is going to increase productivity dramatically and fight inflation. Should, right? On the other hand, we have tariffs, which could both slow down the economy and spike some degree of inflation.
Wait, let me get this in here because this is going to get pretty interesting. Okay.
Yeah.
So they cut the key overnight rate 1/4 point. Okay. The Fed says downside risks to employment have risen. Okay.
Yeah.
That's likely the reason behind this. The Fed projections show an additional 50 basis point cuts by the year end, another 1/4 point cut in each of the next 2 years. Okay, I'll get your reaction to that.
I don't know how they plan for 2 years.
Here we go with the dissenters. So the new Governor Miran dissented on the policy decision, favored a 50 basis point cut. Okay. I'm still trying to get some more of the news here, but give me your reaction as I dig through this.
So I think they're right that the risk to the employment side of the mandate has gone up. I would go further, Sandra. And Charlie is right in saying inflation higher, but I think the risk to the employment side is higher than the risk to the inflation side.
You're probably right, but if we're below the target, if we're still not, or above the target, and if we creep up to 3%, I mean, does the Fed automatically, under Trump, say, well, 3% is the new target? I mean, is that something that American people want to deal with? This is like dangerous, weird territory. I mean, on one hand, we have a real policy debate that you and I are discussing, inflation, is the economy slowing down more than inflation's picking up? Does AI sort of deal with some of the inflation? Are the tariffs inflationary?
So here's what the Fed
but on the other end, we have this backdrop of this weirdness, this political weirdness, where Steve Barron is both a White House official, I guess he's like on leave, but he's still kind of there, and in the Fed. And on top of that, Trump wants to get rid of not just the chair, but a governor. I mean, it is the most bizarre thing I've ever seen in my life.
All right, so the Fed says it's attentive to both sides of the dual mandate. Obviously, that's employment and inflation. They said inflation has picked up. That is noted. Obviously, talking about the risks to the employment side of the situation as well. I'm trying to get some more reaction here, but how do you explain the markets moving up on such a highly expected decision? I mean, there was a 96% chance already priced into the market that we were going to get this quarter point cut, but yet the Dow is spiking. Can we pop the big board up?
Stock traders are stupid, you know.
Okay, right? Let's not go there.
No, they are. They are. They react off these headlines. It's an algorithm.
So I have a different interpretation.
Thank you,
because I have a lot of friends
who are stock traders.
Who are stock traders. Last July, only 2 Fed officials were in favor of 2 additional cuts by the end of the year. Only 2. Yeah. Now we've got the majority in favor of that. And I think that is what the market is reacting to. Not only did we get a cut today, but we're likely to get 2 more cuts by the end of the year.
You know, I always remind people when they talk about the markets going up on something like this, the markets were at an all-time high in December 2007, thinking that the Fed was going to keep cutting rates and prevent the credit crunch from turning into the financial crisis. And they cut, and it still didn't do it. And I think, one of the problems with this, it's hard to gauge whether inflation is more of a worry than employment, and then why are stocks going up on bad employment?
Let me just ask you, maybe this is a silly, obvious question, but I mean, do you truly believe that Jerome Powell hesitated to cut rates just to stick it to the administration? I mean, do you think it was that political? No. Or do you think he's truly acting on the economics?
I think he is what's called a data dependent. He is backward looking, not forward looking. He was looking at data that turned out to be wrong. He has consistently, after the mistake that Charlie mentioned in 2021, where he let inflation get too high, refused to take a strategic vision of the economy. And when you drive a car looking at the rearview mirror, you will make mistakes. And I think that July was a mistake. He should have cut rates.
Do you think this is going to get the housing market going again?
No, it's not big enough. It's not big enough.
Yeah, this can't get mortgage rates going 25 basis points. I mean, you need a lot more. And there's other structural problems with, I think, the housing market, which, I mean, listen, if you believe we're heading into an economic downturn, how is this going to help the housing market?
Just to confirm, it was only 1 dissenter.
So that's a surprise.
Yeah, it was 11-1 vote.
I mean, a lot of people were expecting 3 dissenters.
Yeah. As I mentioned earlier, Myron was the lone dissenter. 11-1 vote, less dissent than obviously many were predicting. Not only was he a dissenter, he believes that it should have been a half point cut. So, final question. Do you still believe it's time for the Federal Reserve Chair to go?
I do. The attacks on the Fed have intensified. I think he is a cause of those attacks. Now, the good news is there's general agreement that we need reforms to the central bank. That is good news because this is a central bank that has gone to sleep on reforms. But I do think that we're going to see further political attacks on the Fed, and that is unfortunate.
Okay. Final thought, Charlie?
I think he should go because he wasn't very good at his job. But I do want to emphasize, I believe, and I'm not, Mohamed's the expert here, I do believe we're in uncharted territory here in the sense that we don't know whether we might get a slowdown in the economy or inflation. And if you start cutting in inflation, we know one thing about inflation, Americans hate it. And it destroyed Joe Biden's chances or Kamala Harris's chances of winning the presidency. And we have a midterm in a year.
All right. So we'll be listening for the news that comes from the news conference. Uncertainty about the economic outlook remains elevated. That's sort of the key takeaway from what we're hearing there, while also putting out there that possibly 3 cuts by the end of the year. Probably that's mostly what the stock market's reacting to. This was a pleasure. Thank you very much to both of you.
Thank you.
Hey, Sean Hannity here. Hey, click here to subscribe to Fox News YouTube page and catch our hottest interviews and most compelling analysis. You will not get it anywhere else.